All right, we will get to your calls in just a little bit, but first we're going to talk about the fact that the Bank of Canada is holding its benchmark interest rate steady at 2.75% for a third straight decision as the central bank grapples with tariff uncertainty. Joining us here in studio is Clinton Wilkins, our mortgage guru, to talk about all this. Clinton, thanks for joining the show.
Well, thanks for having me, Todd.
All right, so what are your thoughts on this, I guess?
You know, I think people were expecting a hold. We put a little survey up on our Instagram. You know, we like to do this once in a while. And the bulk of our connections thought that it was going to be a hold. People either thought it was going to be a hold or a 25 basis point reduction. You know, I think the hold really is dictated by what we're seeing in the job numbers as well in the inflation numbers. So both of these things are not indicative of seeing the rates being lower. I think borrowers in general are hoping for lower rates. It's just the job numbers and the inflation don't dictate the rates being lower. You know, I think going into the fall, you know, things can change really anytime, and things change so quickly, especially with what's going on in the U.S. You know, and the Bank of Canada, I think, is doing these meetings and making these decisions, and they're looking at everything. So, you know, I'm optimistic that we're going to see the rates continue to go down. But when are we going to see them go down? It may now even be into 2026, just depending on what happens with the job numbers and with inflation.
All right, and how about the tariff situation and that uncertainty? What are your thoughts on all that? That's kind of hanging over our heads, right? Casting a big shadow over the economy in general.
Well, and I think our listeners couldn't even clearly articulate what's going on with tariffs. Yeah. I don't even know from day to day. It's changed so many times, and you know, there's been so many deadlines, and you know, things have been pushed back and changed. And maybe the baseline is going to be a 15% tariff. I don't know. But that is going to impact what's going on in Canada. And I think the biggest economic driver is really going to be, you know, what's going on with our GDP and what happens with our trade. So depending on what happens with tariffs, we may see more of a recession type situation. And if we do, that'll be something that the Bank of Canada is going to take into consideration and lower that key overnight rate to spur spending.
Yeah, for sure. So, look, as far as mortgages go, and we were chatting before we went on air, and you were talking about the fact that your business is doing well and business is up, but a lot of people it's at refinance, or is it when their mortgage renews is when you're getting a lot of action, right?
Huge. This is the number one thing that we're doing every day, Todd. Yeah. It's refinances, and I've never seen refinances like I've seen right now. And I've been doing this almost 21 years now. We've done over 6,000 transactions, but a lot of refis happening. And consumers are doing refinances at renewal, but they're also doing refinances midterm for a variety of reasons. One, to extend the amortization. People want to lower their monthly output of their mortgage payment. You know, they are concerned about the interest rates, but you know, taking the longer amortization is helping them balance out these higher rates. And a lot of these borrowers that we're talking to, it's a temporary extension is the way that they're thinking about it. They're re-amortizing to 25 or even 30 years to bring down that monthly payment, but not forever. They're saying, okay, we're going to do this for 3 years or 5 years. And when the rates are lower in the future, we're planning on bringing our amortization back down to 20 years or 15 years or 10 years or whatever works for them. So that's what we're seeing. And when people are doing these refinances, Todd, they're pulling equity out. Oftentimes they're consolidating unsecured debt. Sometimes they're doing renovations. Sometimes they're doing investments. Sometimes they're just adding a different product like a home equity line of credit. But these borrowers that we're talking to that bought a house more than 3 years ago have a lot of equity in their homes in most cases, especially these borrowers that bought homes prior to 2020. Let's be real. The property values have gone up a lot. I don't think they're going up as quick as they were. And in terms of price point, I don't know if the price point's actually softening per se. It's just not increasing as quickly as it was.
Yeah, thank goodness for the fact that they've got equity and the price point has gone up, because that's the only way that you'd be able to refinance, right?
Yeah, definitely. You can only refinance up to 80% of the market value of the property. Like, for example, if a property value today is $500,000, and a property value, the way that we think about the value is what could someone sell their home for?
Right.
So let's just say, for example, just for rough numbers, it's $500,000. The maximum mortgage that someone could do would be $400,000. And from that, they'd need to pay out any existing mortgage or secured debt, like a home equity line of credit that they would have. So the delta would be what they could really, access in terms of new available credit. And I think that's sometimes confusing to borrowers. Like, sometimes I talk to borrowers that bought a home even like 2 years ago, but they only put down 5%. And then we ask them, okay, well, what could you sell your home for? There's just not equity to be able to take out. So it's really that 80% rule is really, really key.
Yeah, there was concern about this kind of cliff that people are going to be hitting because we know that people borrowed money quite inexpensively in 2020-ish, that type of time frame.
Canadians were drunk on cheap money.
That's right. And there was this concern that the people would be hitting a bit of a wall. Has that happened?
This renewal cliff, I think that was really, I think it was kind of a catch in the media.
Yeah.
I think for some borrowers, they're feeling the pinch, but I think they're feeling the pinch even before renewal. We're seeing borrowers that, bought a home 5 years ago. Yes, the interest rates have gone up, but everything else has gone up except their pay. So they're feeling it at the grocery store. They're feeling it at the gas station. They're feeling it, buying other consumer goods. They're feeling that their monthly costs are higher now than they once were. And then when the mortgage comes up for renewal, it's really adding kind of that insult to injury in some of these cases. And some borrowers are choosing to sell their homes. I think that we're seeing more listings come up. I'd be curious to hear what the realtors think, but I'm just even looking on MLS. More properties for sale, and I think properties for sale for more days. And the purchase agreements that we're seeing coming in our office seem to be more balanced. We were really in a seller's market here in Halifax. The sellers had all the power. The buyers had really no power. Either buying it, not buying it, and we were looking at bidding wars. Now I think it's more balanced from a buyer's and a seller's perspective, which I'm really here for. As somebody who works in the industry that supports people buying real estate, having a balanced market, where everyone's happy is the most ideal situation. And I hope that continues. And our biggest struggle was that we had this lack of inventory, but I'm seeing more. And I'm seeing more come up every day. So I think that's really positive. And there certainly are a lot of buyers out there because let me tell you, we've done a lot of pre-approvals this year. And we're just kind of waiting for people to get purchase agreements together. So, I think we're going to see more activity even going into the fall.
Yeah, and people, as far as down payments go, you can borrow your down payment. Is that true?
Yeah, you can definitely borrow your down payment, even from a line of credit or a credit card. That's certainly doable. You could be gifted it from the bank of mother and father.
Yeah.
But the Nova Scotia Down Payment Assistance Program is huge. And, we see a lot of first-time home buyers, depending on what their total income is in the household, to be able to access this Nova Scotia Down Payment Assistance Program. And the program's different across the province, but on the Nova Scotia website, it has all the constraints depending on what county you're in. Different county have different limits based on the purchase price as well as the household income. So definitely something to think about as a first-time home buyer. And, when we're doing these pre-approvals, we're talking to people about their life and what their plans are. And, some borrowers are saying, well, it's going to make more sense if I can put down 20% and I'm going to wait a year or 2 years to do it. And I kind of use this adage to say, these people that bought these homes with 5% down in 2020, they're way further ahead than the people that waited 5 years to try to put down 20% today. Because the purchase price, is what the purchase price is. We're less concerned about rate. What we say, and we use this adage that, you're marrying the home, but you're only dating the rate. But it's kind of the same when we're talking about down payment. Yes, it's a sunk cost from the Canadian Mortgage and Housing Corporation, Sagen or Canada Guarantee if you put down less than 20%. But the cost of real estate today is likely going to be much less than the cost of real estate will be in the future.
All right. So what is the typical 5-year fixed rate right now?
We're seeing them in the low fours, like 4.25-ish is the current, rate products. Whether you're taking a 3-year or a 5-year fix, or you're taking a variable, all the rates primarily are in the fours. A couple of months ago, Todd, things were really kind of edging down in that 3.99 range, which I think optically looks really good. The difference between the 3.99 and 4.9, really not a big difference, but optically the 3.99 kind of looked exciting. But a lot of lenders have increased their rates. It's really due to what's going on in the bond market. So I think in terms of what a borrower could expect, 4.5%, 4.25%, maybe low fours, just depending on what the situation is. But that's pretty much across many different rate products. It doesn't matter if you're doing a 3-year or 5-year or variable, you're going to see rates in that type of range.
Okay, and a reminder, the Bank of Canada holding its benchmark interest rate at steady at 2.75% for a third straight decision, and I suppose we'll wait and see what happens in September. Any predictions on that? Or
I'm either going to say we're going to see a 25 basis point reduction or it might be a hold. I mean, I'm really going to be watching the job numbers.
Yeah.
I'm going to be watching GDP, and I'm going to be watching to see what goes on with inflation. So we'll be reporting on our show. Our show will be on again. Mortgage 101 will be on in August. I'm sure we'll talk more about what's going on in the Bank of Canada and the economy then for sure.
Okay, Clinton, thanks for coming in, my friend.
Thanks for having me, Todd.
All right, you got a Clinton Wilkins, our mortgage guru. Your calls when we come back.